This podcast is episode 26, entitled The Mortgage and Closing Fees When Buying a Home. Buying a home is one of the biggest financial decisions you'll ever have to make, and one of the most misunderstood parts of the process is the mortgage and all the closing fees that come along with it. Most first-time homebuyers focus on one number, the monthly payment, but what many homeowners learn the hard way is this: the monthly payment is only part of the story. Today we're going to break down what a mortgage really is, why the mortgage interest rate matters, the standard conventional and FHA loan, the common closing fees you will have, and a few examples that could help you avoid costly mistakes. Welcome to the Happy Homeowners Hub Podcast, where we share real-life stories and break down the lessons, mistakes, and wins that can save you time, money, and stress on buying your first home, navigating your property claim, selling your home by owner, and home maintenance and repair tips. I am your host, Fred Turner, and each week I'll guide you through these 4 topics. What is a mortgage really? At its core, a mortgage is a loan used to purchase a home. You're borrowing money from a lender, and in return, you agree to pay it back over time with interest. And the home itself is used as collateral. That means if payments are not made, the lender has the right to take back your home. Now here is where things start to get real. Most typical mortgages are structured over a 15-year period or a 30-year period typically. And over time, you could pay tens or even hundreds of thousands of dollars in interest. Your mortgage payment is often referred to as PITI, which stands for Principal, Interest, Taxes, and Insurance. Let me translate that into real-life language that you can easily understand. Principal is the amount of money you borrowed. Interest is what the bank charges you for that money. Taxes are property taxes collected monthly. Insurance includes your homeowner's insurance and sometimes your mortgage insurance. So when someone says their mortgage is $3,200 a month, they're not just paying for the house, they're paying for all 4 of these components combined. Now let's talk about FHA loans, because this is where a lot of first-time home buyers start. FHA stands for Federal Housing Administration. These loans are designed to make homeownership more accessible to first-time home buyers. Here's why people choose an FHA loan: a lower down payment, often around 3.5%, more flexible credit requirements, easier approval compared to conventional loans. Sounds great, right? Well, here's the trade-off. FHA loans require mortgage insurance, and not just at the beginning. In many cases, you're paying mortgage insurance for the life of the loan, unless you refinance or until you have 20% equity on your home, but verify this with your mortgage company. Here's a real-life example. I know someone who bought their first house using an FHA loan. They were excited because they only needed a small down payment. About 2 years later, they realized they were paying hundreds per month in mortgage insurance, and that money was not building any equity. They ended up refinancing into a conventional loan once their equity increased over 20% and they were able to lower the monthly payment. The lesson here is simple. FHA is a great entry point, but it may not be your long-term plan. Now let's get into the part nobody really explains very well, the closing fees. When buying a home, you will encounter closing costs. These typically range from 2 to 5%, possibly even a bit more of the purchase price. Here are some of the most common fees. The loan origination fee. This is what the lender charges to process your loan. Loan fees can vary from lender to lender and may sometimes vary quite a bit. Common loan fees are known as points. A loan point is 1% of the loan amount. Loans could have 1 or 2 points due at closing. Application and processing fees are usually around $200 to $300. Credit report fees are typically $30 to $60. Appraisal fees are typically around $300 to $500 depending on your state. You are paying for someone to determine what your home is worth on today's market. There are also many websites available with helpful tools for home buyers to show you what typical fees could be. At Zillow.com, there's an affordability calculator, a mortgage calculator, a debt-to-income calculator, and an amortization calculator. This will show you how much interest and principal you'll have to pay each month on your mortgage. Other good websites for such information are mortgagecalculator.org, nerdwallet.com, ramseysolutions.com, and rocketmortgage.com. There's also the home inspection fee. This is your chance to find problems before you buy the home. This fee typically ranges from $300 to $600 and could be more if you need a radon test or special additional inspections. Title insurance fee. This protects you and the lender from homeownership disputes. This typically is 0.5% to 1% of the purchase price. So for a $300,000 home, that would be $1,500 to $3,000. There's also recording fees. The local government charges a fee to officially record the transaction. This is typically between $50 and $150. Then there's prepaid cost. This includes property taxes, home insurance, and sometimes mortgage interest, and an initial escrow deposit. These costs could range anywhere from 2 to 5% of the home's purchase price. Here's another scenario to consider. This scenario could easily happen to any first-time home buyer if they don't do their homework and know the costs up front. A home buyer saved exactly enough for a 5% down payment. They thought they were ready, and then came the closing cost. They were short by several $1,000s and almost lost the deal. They ended up having to borrow money from a family member to close. The takeaway is this: your down payment is not your total cost. You will need additional money for a cushion for closing costs and unexpected expenses. Interest rates and why they matter. Interest rates can have a massive impact on your payment. Let me give you a simple comparison of the total difference of a 5% interest rate compared to a 7% interest rate over the total length of a 30-year fixed rate loan on a $300,000 home. That could really put this into perspective. At a 5% interest rate, your monthly payment is around $1,610 on a $300,000 loan. Now take that same exact house, same price, same everything, but your rate is 7%. Your payment jumps to about $1,996 a month. That's a difference of about $386 every single month. Now think about that for a second. That's not just a small bump in your monthly payment. That's groceries, that's a car payment, that's real money leaving your pocket every month. But here's where it really hits. Over the life of a 30-year fixed rate loan, at 5%, you pay about $279,000 in interest over the entire loan. At a 7% interest rate, you pay about $418,000 in interest over the length of the loan. That's roughly $139,000 more for the same house, just due to a 2% higher interest rate. That is huge. Same house, same neighborhood, same everything. The only difference is the interest rate. I have seen homeowners rush into a purchase because they didn't want to wait a few more months. Sometimes taking a little time to improve your credit or shop lenders can save you tens of thousands of dollars. This is one of those decisions where slowing down could actually speed up your financial future. And timing matters. Shopping lenders matters. Even improving your credit score before buying your home could save you thousands of dollars. Private mortgage insurance, also known as PMI. If you put down less than 20% on a conventional loan, you will likely pay private mortgage insurance, also known as PMI. This protects the lender, not you. This is one of those things that surprises homeowners. The good news is PMI can often be removed once you reach 20% equity in the home. FHA, on the other hand, handles it differently, as I discussed earlier. Here are some common mistakes to avoid. Let's wrap up this section with a few mistakes that I often see. Focusing only on the monthly payment, not budgeting for closing costs, choosing a loan without understanding the long-term costs, skipping the comparison of lenders, their rates, and what they can offer, and not planning for future or refinancing opportunities. Buying a home is not just about getting approved. It's about making smart financial decisions along the way and finding the best options that fit your lifestyle. So let's quickly recap what we covered today. A mortgage includes more than just the loan. FHA loans can help you get started, but may cost you more over time. Closing costs can catch buyers off guard if they're unaware. Interest rates play a huge role in the long-term cost of the home. Understanding your loan and closing costs could save you thousands of dollars. If you found this podcast helpful and want to go deeper into the home buying process, check out my book, The Happy Homeowners Handbook for First-Time Homebuyers. You can also grab one of my other books, The Happy Homeowners Home Maintenance Journal, and other books also available on Amazon.com. For more details, see the show notes or go to my website, happyhomeownershub.com. These resources were created to help you become a confident, more knowledgeable homeowner with fewer surprises along the way. If you're interested in receiving my newsletter, where I share tips, stories, and strategies to help you become a happy homeowner, head over to my website, happyhomeownershub.com, and go to the Contact Us page and type the word newsletter in the message box. Here's the Happy Homeowners Hub Podcast disclaimer. The information provided in this podcast does not and is not meant to be considered as professional or legal advice and should not be used without consulting a professional loan officer, licensed real estate agent, or an attorney. The information provided is based on my experience in the home buying, home selling, and home maintenance industry and is meant to be for educational purposes only. Thank you for listening to the Happy Homeowners Hub Podcast. My goal is to make your homeownership journey smoother, smarter, and way less stressful. If this episode has helped you better understand mortgages and the true costs of buying a home, share it with someone who's also thinking about buying their first home. Knowledge is power, and the more you know going into the process, the fewer regrets and mistakes you'll have later. I've got some great stories, tips, and occasional guest experts coming up in future episodes, so stay tuned. And remember, your home is your biggest investment. Be smart from the start. Thanks for listening. This is your host, Fred Turner, and I'll see you at the next episode. Have a blessed day. Goodbye.